Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back. Let's keep up with our gold analysis. So yesterday we have discussed the bit emotional reaction on the China decision to cancel any lockdowns on the COVID steps, and in general it was really positive spike on the gold market, which I suspect was mostly speculative and just using of the thin market. Market makers were trying to shake the boat and grabbing the stops that have been placed above the top on the holidays. Just because I suggest that if we would have the normal market conditions, normal liquidity, hardly this reaction could be so emotional, so strong. It probably might be a bit to the upside, but not as strong as we see here. Anyway, once this has been completed, we said we have the grabber and actually bearish performance on the lower time frame, but still, since we have a lot of volatility in recent few weeks, canceling of the free drive that we talked about, a few bearish patches that have been formed constantly with these performances. You can see side by side we have evening star patches that have been cancelled, erased by the next following price action. Grabber is really good stuff, but we said that for a longer term position, for traders who are trading on a daily and weekly chart, it would be better to wait for a bit more confirmation. Purely with the grabber, you could deal if you trade on the hourly chart and low time frames. There you could consider taking the short position. And in fact, yes, the market keep going lower. So on the daily chart, we do not have something really new. Grabber still stands in place. Market shows the downward action. Which is good is that actually all this stuff stands near the neckline, which keep chances on the downward action. Besides this, we discussed in today's Forex video, more and more bearish signs starts appearing on Forex market across the board in all major currencies, including the dollar index. And it's suggested that it seems that the recent extreme point is in the gold market here on the currencies. It should become the starting point of the big pullback based on the monthly chart, monthly bread and butter trade that we're actually watching for. Meantime, on the gold on the 4 time frame chart, take a look what we have after the initial pullback. Here we could get the grabber, so this candle is not closed yet, but it has tested the MACD line, and if it closes as it stands right now, in this case we could get the grabber that's just taken out of these lows. So that will be good background for considering taking speculative short position once again on the lower time frame. Actually, the background for taking the short position is already stands in place, because if you take a look at the hourly chart yesterday, when we said concerning retracement, actually it has not happened. This market just keep going lower, taking out of this lows of this rally, which is also bearish, totally erased the bullish reaction on the China step. And then it has turned to some retracement. Now with this minor ABCD pattern, market hits the agreement resistance, which is a COP target and 1810.67 level. So this level, although we have the OP around 1850, but this level seems more important. It's just because it is agreement resistance, combination of the upside target, although this is minor target, and major resistance level. This is more important, and in current circumstances it makes no sense to wait for 1850. Besides, if you take a look at the CD leg, it's very choppy and slow, and the reaching of the COP, well, seems logical in the current situation. So with getting the grabber on the 4-hour time frame chart, that might be more or less good background for considering taking the short position with taking out of these lows. So maybe later market will complete some A, B, C top, some deep targets. So you could use the COP as a minimum requirement target here. Also you could use the support line right there as a target. So but this is mostly speculative background. It's just for a short-term trading. That's what we have. For other traders who are searching for and watching for taking some more or less longer term position on the daily chart, maybe the same as the Forex market with the bread and butter trade on the monthly chart, we need to wait a bit more and see more, get more bearish signs. Particularly speaking, as we said, it's consolidation that we are watching for. Although we have the narrowing consolidation, which starts looking like the bearish wedge, but market is still going inside of it and keep high highs and high lows tendency. So from that standpoint, no major bearish step has been done yet. So for longer term position taking, it would be better to wait and see. Besides, once again, this is a thin market, as we said, and maybe next week when most people return back from the holidays, its situation will change a bit and more activity will come in the market.